It's 6 a.m. We are half an hour before the market is open. And yesterday we had a super muted day. We didn't really move anywhere. We weren't expecting it to be very active, but it was even more subdued than I thought it would be. So it was quite boring to watch that market yesterday. It might bleed into today. It could be another inactive day. We're not too sure. So we'll just have to wait and see what happens. Tomorrow, we're almost guaranteed to have another very subtle day because we have a major report coming out on Thursday. Technically, the ones today are pretty important too. So we could get some volatility after those hit. Let's see what time those come out. We've got durable goods at 5:30. That already came out. So we'll check in a moment to see how that went. And then we've got consumer confidence. That will be the bigger report of the two. That doesn't come out until half an hour after the market opens. That means we're going to wait before we make any big decisions, before we start day trading. We will wait until at least after 7 a.m. this morning or half an hour after the open, because that'll almost certainly introduce at least some volatility, maybe not necessarily directionality, but things could get a little bumpy at 7 a.m. So we might wait until 7:30 or 8 a.m. if we're going to look for steady trending market or higher confidence with day trading. If you are going overnight and you have a system that tells you to enter at the beginning or at the end of the market, then you don't really care. You're just going to let the market do whatever it does. Today, that's going to be the major stimulus today, if there is going to be any. And then tomorrow we'll be very quiet waiting for that GDP. Let's take a look at how we're opening in our futures. Before we do that, we've got some color back. So on Friday, or I was saying, or maybe it might have been as early as Thursday, I was saying how we had to wait and see because there's no way we could tell what was doing well and what wasn't doing well because everything was absolutely green. And now we have some color on some 20, 50 moving day averages, and we've got color on the 5-day moving averages. The 5-day moving averages, we have almost the opposite problem. Almost everything is in this reddish tint. We do have a few spots though. So we do have some separation of our sectors, and we can, at least on a very short-term basis, we can determine which ones are doing better and which ones are not doing quite as well. And we can look at maybe the 20 and 50 day as well. So we'll do that probably at the end. Let's first go to our futures and see how we're opening up, and it's mostly flat. We've got the S&P at about 0.2%. So that is in the random region. We've got Dow definitely in the random region at about 10 basis points. And we've got the NASDAQ at about 30 basis points. So everything is up. It's slight bias to the upside, but still within the random region. So we're not going to necessarily believe in the direction that these are pointed. So we could end up today, we could end up down today, we could end up sideways. I'm leaning slightly towards sideways because of the day that we had yesterday. Very low volume, very low movement, actually. And we're probably going to wait for these more major reports. Now, consumer confidence could change that. That consumer confidence report that's coming out in about an hour could definitely change this. So we might end up or down on the day. Let's take a look at how our pre-market is looking. Something happened. We were up, so we probably got some tailwinds from Europe, from Asia, and then we came down. So that 5:30 report, that durable goods report, looks like it may have had an effect. Get 5:30. So we really started more around 5 o'clock, and then we got probably a steeper motion at 5:30. So the durable goods, I can't say is responsible for all of this, but it did help us come down further. So we were looking quite positive. This was non-random before 5 a.m. and then we started to come back down. Now we're more in the random region. We closed just below this purple line right here at 520. Looks like we might open around 521. We still have 20 minutes or so before we open, so we could pop back up a little bit in the pre-market, but it's looking like probably around this 521 region. And that was not, if I recall, a super important level. The 520 was more important. Yeah, 520 was a little bit more important. But today, if we have a repeat of yesterday, yesterday was a super narrow range. I don't necessarily believe that we'll trade in such a narrow range, but 20 to 522 region, or this 518 to 524 region, that's most likely where we're going to stay today. If we break below the 518, that's going to be pretty significant. And then if we go above the 524, then we're making new highs, brand new all-time highs. Not likely to happen today, even if we get a really strong consumer confidence report, because we still have the GDP coming up later this week to backstop us. So I put the probability of going above 524 today very low, maybe 10 or 20%. And then the possibility of going below 518, probably slightly higher, maybe 30 to 40%, slightly below random, slightly below 50-50. So most likely we're going to stay in this range, the 524 to 518 range, maybe even a tighter range, this 520 to 522 range. Let's take a look at how we look on a day basis. So yesterday we came down further. We tried to go up, but we closed pretty much exactly where we opened. And we ended up with 48 million in trading volume. So when we did the aftermarket, we started out at about 32 million. Then we got the dark pool and some other data, so it bumped up to about 43 million. And now the official end volume data is at 48.5 million. That's still pretty low. It's just a little bit above half of the average volume. So today we may get a little bit more volume than that. And then Wednesday it'll probably dip back down. But basically all week we're just going to expect to not have a lot of volume and mostly chop sideways unless we get something super significant in the consumer confidence. But again, that consumer confidence by itself is probably not going to eat up all of this range right here. So most likely we're looking at the GDP that might have the ability to send us up or down. And more likely we're just not going to this week. If we get larger movement or if we break out of ranges, it's most likely going to be on Monday or Tuesday or sometime next week when traders are back in their seats because of the shortened holiday week this week. So if we come down, we might touch that EMA 8. We might go a little bit lower. So we do have that possibility today, but it looks a little bit more like we're just going to chop sideways. And we're not going to get too excited either way. We're not going to make huge financial directional decisions with our portfolios today because that's probably not going to happen for large institutions. So there's not going to be a lot of money flowing around as indicated by the low volume yesterday. And if that's the case, then we shouldn't be allocating a large amount of money because there's probably not going to be a lot of direction. And if we're investing in options, for the most part, we need a fast directional move. There are some strategies generally taking more than one position, so like a spread or multi-leg spread that would make it okay for the prices to move slower. But in general, if you're only buying one option at a time and the further out of the money you go, the faster you need that price to move. So even if you go in the money or pretty deep in the money, you still need the price to move reasonably fast. So since this week we're anticipating not a huge range of motion, it's not a great time to put on short term or out of the money positions. So we're going to wait. We're going to wait before we put those types of positions until at the very least next week, but until we see directionality come into the indices. So S&P is showing us maybe down to this EMA 8, maybe as high as the previous high. That if that happens in one day, then that could be enough movement for an overnight position or a single day, 1 to 2 day position. But anything more than that, anything longer than that, I should say, it's probably not enough. So we want to be careful on the types of positions that we put on right now. QQQ, we're in the box. So this is, we even want to be even more careful of the sectors that are heavily weighted in the QQQ because we are kind of trading in the range. But like I said, if we caught this move or this move or this move in these 3 days, then that might have been okay for a 1 to 3 day, 4 day position. But it's not going to be okay if I have a 2 week, 3 week, 4 week position. So we want to be very careful, especially be very particular about the sectors that we might buy options in. And we want to make sure that they're short-term positions, that we're willing to close them after a reasonably large move on a single day, or we select the options and we do all of our calculations and our option criteria based on a normal single day move. So if I know that QQQ moves 5.5 points in a day, I want to make sure that a 5-point movement in my option creates a significant enough profit for me to say, hey, that's good enough. Let me take my money off the table. So if that 5-point move makes 50%, for example, that might be great. That might be a single day or 2 days or 3 days where I get 50%. That might be, hey, that's excellent. I'm going to know and expect that and take money off the table. But if that 5-point move represents a 5% gain, maybe that's not juicy enough for me to say, hey, I'm going to take my money off the table. The reward risk doesn't make sense over here. So I wouldn't even put on that trade to begin with because I'm not expecting this to move 10 or 15 or 20 points to give me enough of a reward for the risk that I'm taking. So we want to pick very carefully. Do your analysis up front, choose your options very wisely, or take a longer term view where long enough where we might chop out of, not chop out of it, but where we might move out of this box and this choppy movement that we're experiencing. So let's go to Dow Jones. Dow Jones, baby parabolic movement right here, pulling right back to the EMA 8. So we want to see this bounce off of the EMA 8 or see it come down to the EMA 20 and bounce in order for us to believe in the continued motion in the Dow Jones. Actually, EMA 20 wouldn't cut it because EMA 20, what happened yesterday is we came down and we tested both the top of this box and the EMA 8 at the same time. So what we really want to see is a confirmation bar of a bounce off of the level where we closed yesterday. And if we can get that, then we can probably get a continued upside move. Otherwise, we're falling right back into this box and then we're in no man's land. We don't know. We might just chop around again. So this could have been a false breakout. So we really do want to see a bounce and a confirmation bar today, if not tomorrow. Well, tomorrow, we said that's pretty unlikely because we're expecting a muted day ahead of the GDP. So if it doesn't happen today, it's probably not going to happen tomorrow. And then maybe it might happen off the GDP. But by the time you get 2-3 days into this, if we're drifting, then we're just drifting at the top of this box instead of inside the box. That's maybe not so different. And at the very least, the next few days, that's the sideways movement. So again, we wouldn't necessarily want to put a directional option trade on in the sectors in the Dow Jones, because at the very least, we're expecting today, tomorrow to chop sideways. So the soonest we might want to consider that is, wait, tomorrow. Wait, what am I thinking? Do I have my dates mixed up? Today is Tuesday. Ah, for some reason in my head, I was thinking it was Wednesday. So tomorrow, today we chop sideways, tomorrow we chop sideways. At the very earliest, we might want to get directional is on Thursday. So we would hold off on our single option trade unless we did our calculations and our analysis and we priced a move and said, hey, if we move 3 ATR, then, sorry, not 3 ATR, our ATR is 3. If we move 3 points in one direction, that's enough of a profit to justify the risk that I'm taking when I go into that position. We have to do that analysis, especially right now in this environment where it's looking like everything's going to chop for a few days, if not longer. Small cap stocks, or comfortably back down in this pink region. We are at the EMA 8. We have been for a couple days. So look, again, looks like it's a little bit of chop, and really this has been actually, we're getting a little bit of range over here. So this is a larger range chop. So there can be okay trades in this, but right now for a chop between the top of this pink line or this higher pink line and the EMA 8, that's not a lot of range. So I would adopt the exact same thing for all of the major indices. So if I'm adopting that for QQQ and I'm adopting it for the Dow Jones and I'm adopting it for small cap stocks, there's not a lot left to consider single trades on. So that's really the only thing left is the S&P. S&P, we're, at least for this week, we're expecting it to kind of chop sideways as well. So I probably don't want to put on single options trades. So earlier when we were saying, hey, we can look at some of these sectors, yeah, we can look at them, but we're probably not going to take any action until Thursday at the earliest. If we're going to take action on Thursday, well, we might as well wait until Monday because we're going to experience time decay on Friday, Saturday, Sunday, because we're not trading on those days. The markets will be closed on those days. So it doesn't make a lot of sense actually to put on single option trades at all this week. Today, tomorrow, Thursday, it doesn't really make a lot of sense. So this is very much a wait and see week, mostly because of the holiday is creating that dynamic. So should we continue? I mean, if we're not going to put on a trade anyways, it doesn't make a whole lot of sense. I guess we could potentially put on a longer term trade, 3 to 4 week, 1 month, 2 month trade. That's hard to justify right now though, because we don't have a lot of activity in our 20 days. So if I want to match up the moving average that I emphasize with the time frame that I'm looking to trade or invest in. So I don't have a lot of separation on the 50-day. So a 1 to 2 month trade, a 3 or 4 week trade, I would be, I guess, looking more at the 20-day. But a 1 to 2 month trade, we'd be looking at the 50-day. So it doesn't, the only thing I see is differences between the small cap stocks and some of these sectors over here. So that's not a lot of, it's the 2000. Yeah, there's not a lot of options to look for. Options, not contract options, but not a lot of selection in that time frame. So we're probably looking at the 3 to 4 week time frame. It looks like we've got some separation in real estate, healthcare, energy. We could take a quick look at that. XLRE is not looking great. broke below the MA50, but it's been chopping around the MA50. So what you're seeing is the converging of these shorter term moving averages, the MA200 and MA150 are a little bit further away, but we're getting convergence around all of these. It looks like XLRE is getting ready to chop sideways. So that's not that helpful. That puts us in the same boat as the S&P, CCQ, IWM, Dow Jones. So XLRE is not looking like a great candidate. XLV was directional, but has gone very flat in the past several weeks. So very, very choppy sideways movement. So unfortunately, not a great sector to go in as well. And then what was the other one? Energy. Energy. Energy is very directional, very positive. Might prefer to wait for a pullback to the EMA 8, but it is very linearly staying above that EMA 8. So the only possibility I would see here is in the energy sector. So strong names in the energy sector. I think I remember seeing PSX hit my attention yesterday. There you go. So a very nice uptrend bouncing over here off of the MA50, here off the EMA 20, then off the 20, then off the 20, then off the 8. We're at the 8 again. A little bit sideways movement in the past week. So fitting the theme of chopping sideways, but maybe not. I might wait. I would wait to see if this bounces off of the EMA 8 or pulls back to the 20 because it's been reacting to the 20 a lot more so than the 8. So this is, again, if we're going to wait a couple days, then we're already on Thursday. We might as well wait until next week. You could spend a little bit more time looking for opportunities within the energy sector. This is just the one that I remember seeing recently. So that's why I pulled it up. So if you want to look for something, I look for it in the energy sector. Otherwise, this week is just hands off. We'll watch what the market does and then wait to get into position next week. Okay. We're only about 5 minutes away from the open, and our conclusion is sit on your hands or go do something else and just wait till next week. We'll see if today's market changes that after the consumer confidence. Maybe it's a different story by the time we get to the aftermarket session. But for now, it's really looking like we should just be sitting on our hands. So I'll leave you to prepare for the market open, and I will see you guys in the aftermarket session today.